Hi, everybody. This is Gary Dean with Sentiment Timing, and this is our technical video report for Tuesday, August 8th, 2023. So we saw the S&P close down about 20 points today, which was a really a complete win for the bulls. Being that they came right down to the support area. Now remember, yes, I've been looking for the top. This thing here, this that definitely took a lot longer, but when we made this top right here, we had the engulfing candle top, never made a new high, took out the lows. So everything is, let's say, going off the check mark for this being a top right here. But when we've been coming down, I've been showing you the support levels because we get new members each day, each week, and some of them are not positioned, and even people that are that maybe got in, but where we took a bunch off of, we made some good profits and we took some off, but then we got stuck in this one. Some may want to just close out a little bit of the position and then regroup when we bounce. It's totally up to you. The sidestepping in and out when we were when we were doing it here and we were making a couple hundred points. It was great. And then, like I said, this was the little trap zone, really right around when we came into the May time period, right here at the end of May. So this was it. It looked like we were making the top right on schedule, and then we kept going. So the reason why I give these support areas are, some may want to say, you know what, I'm going to take half off and redo it. I don't want to, wait for another bounce. So that's why I put these in place. And I tell the new people, don't be looking to short down here. It's a really really strong support area, and you're asking for trouble, especially when you look at a 60-minute chart, and we have buy signals. So we made it down to the where I've been saying that the bears need to get through the 44.50 to the 44.50. If they 44.40, 44.50, 44.40. Sorry about that. And if they get below here, that's when we start seeing really big nosedives down to the 43.84, down to the 43.28. But until this level gets taken out, shorting on these drops are very dangerous because this is the risk. You're going to short this gap down, and next thing you know it, you're underwater before the trade even started. So that's why I give these. And again, I've been saying until the Bears can push it through this support zone, the Bulls are going to continue to try. So we anticipating this bounce, yeah, that was I had no problem with it. I thought it was going to happen. I didn't realize yesterday's gains are going to be wiped out so fast, but here we are. So we have the gap 45.07. If they get above that, now the Bulls have to deal with 45.17, which is the 50-day moving average. If they get above that, then they have this at 45.19, right? This top right here. And if they get through that, then they got to go and deal with the 45.40. So there's resistance areas on the way up, and that may cause them to use. I do not believe that the Bulls have a full tank for the main reason that we have these sell signals on daily charts. We broke a bearish pattern. Sentiment was at extremes. So even though that we're oversold, I can see us getting a bounce, but then just taking out the lows again. And again, I'm not looking for a crash. I'm looking for a move that's going to take us somewhere down into the 4,200, possibly even down to the 4,100. That would make sense. Even closing this gap down here at 40.27. I'm not exactly sure where, but I'm not looking for this market to crash. I just think that this is just a silly buying dream that the Fed was going to start lowering rates. And again, I really have absolutely no idea how anybody even bought that, but I'm not sure how anybody buys anything anymore. But in any case, this was, this took me off guard on it, but it hasn't changed where I believe we're going. It took a little bit of a longer time. So again, just to kind of sum this up, as far as on the downside, I can even take this 44.40 and let's just do it, even make this even easier and put it here and say, okay, it's now the 44.23. And the reason why, if you look, This is where the 50-day moving average is. So we know that the retail bulls, they're trained to buy moving averages, whether it's at the 50-day, whether I mean the 60-minute, whether it's at a 15-minute. They're just trained to do it. And then when it breaks, then they're shorting rallies. So it's just a pretty simple game that they do. So the thing is that when we approach this 44.23, the odds of buyers being here are very, very high right now. And if they do, that we're going to get this bounce up. And I'm still not closing the door that they're going to come up and close this gap at 45.75. I'm not sure if they do it now. What may happen? They may pop up to the 44, 45.40, and then come down, try to make some kind of inverted head and shoulders. I'm not really sure. But it would not surprise me if they get this, and this is going to get everybody bulled up again before they pull the carpet out. So, we had the buy signals. So the next resistance area, it's going to be right around that 40. Let's just say that we'll put it right here, the 45.20. If they get above it, we have resistance at 45.25, and then up at the 45.41. We're not even oversold yet on the 60-minute chart yet, or overbought. We are overbought on the 15-minute chart because of this balance right here. So you can see it was just like really the first 30 minutes of trading when things are weak, and then every day just gobbled it right up. So this was a win for the bulls on it. So that's really about it. That we just got to keep an eye on the resistance support levels. And with that, enjoy the rest of your night. I'll talk to you guys in the morning, and have a great night.